Welcome everyone to the kind of final event that we have in our How to Get Onto the Property Ladder series, which is all around sealing the deal. Once again, we're really lucky to be joined by Joe, the Homebuyer Coach. Make sure you check him out on TikTok and Instagram. He puts out fantastic content, very entertaining and very informative. And beyond that, he's had a lot of experience as a mortgage broker, which he still is. We're also joined by Peter, our head of advice. He's had over 26 years experience in the world of advice over a range of different areas. Dan, who's one of our in-house advisors here at Multiply, has had over 15 years experience, and I'm the CEO and co-founder of Multiply, where we're helping people with a variety of different financial goals. But one of the specific ones we're helping customers with is helping them get onto the property ladder, helping them saving their deposit, and connecting them through to mortgage brokers and the right products. So let's go on to the next slide. So just in terms of what we're going to be running through today, so I'm going to quickly start with a quick recap, actually not only of the last session, but also of the series to date. And then in terms of this session itself, we're going to be running through everything you need to know to seal the deal. So this is everything past the point of making an offer and getting an offer accepted. So the mortgage application process itself, surveys and conveyancing, and then everything around moving in and the kind of mortgage afterlife and things you need to think about beyond that point. As with all the kind of other events we've been running to date, please don't hesitate to ask questions as we go along. Dan will either try and kind of answer them as we're going along, or we'll just pick a number of questions up and answer them live as we're running through. But don't hesitate to kind of ask them in the Q&A box. And let's move on. So in terms of the recap to date, in the first session that we went through, we kind of covered the process as a whole. We went through setting your target. Sorry, in the second session, we went through setting your target, what sorts of products, the right products to kind of save up into, and to make the most of government bonuses and such like. The session after that, we ran through getting mortgage ready. So lots of things to kind of consider in terms of getting ready. To kind of set yourself up for success in terms of getting the mortgage. We went through getting a mortgage in principle and the process around that, and the things that kind of lenders look out for. And then in the kind of last session, we went through essentially finding the one. So finding the right property, kind of where to look beyond just kind of Rightmove and Zoopla, making sure that you kind of contact estate agents, you get on their books, you get kind of a head start before properties end up on all the portals. We ran through how to navigate viewings like a pro. So we went through a bit of a checklist that you can use, the sorts of questions to ask estate agents, and the kind of almost like the due diligence you should be doing at that stage. And then finally, we kind of went through how to make an offer, and really what to emphasize there as a first-time home buyer. So there are things that kind of put you to an advantage to non-first-time home buyers. So we ran through all of those. Things like not being in a chain, things like having your kind of mortgage in principle ready. These are all things that help make you someone who's attractive to essentially accept an offer from. In terms of what we're going to be covering today, it's going to be everything beyond the point of that offer being accepted. So this is the second part, essentially, of the home buying process and the things that we're going to be covering off today. So everything from instructing a solicitor, applying for the mortgage itself, we're really lucky to have Joe as one of our panelists today, presenting through that. And Joe's, helped his clients complete many mortgage applications in the past, getting evaluation and a survey completed, receiving your mortgage offer and exchanging contracts, and then the very final kind of celebration around collecting your keys. So I'm now going to pass it on to Joe to kick us off with the mortgage application process. Sorry, there's one more thing I wanted to mention before we go through that, which is for all the aspects of all the sessions where we covered all of these stages, Dan has just posted on the chat channel a link to our YouTube channel where you can kind of watch all those sessions at your own leisure. So we've got them all up on our kind of YouTube channel. Right, Joe, over to you.
Thank you. So yeah, we've touched on the kind of mortgage application process before over the last couple of videos, but we'll go into it in a bit more detail here. So if we can move on to the next slide. This is after you've had the offer accepted, okay? So at this stage, the mortgage in principle should already be in place, and you'll now need to convert this into a full mortgage application. So initially, you'll need to inform your broker of the good news. So give them a call, let them know, what's happened, let them know a little bit about the property. The broker will then ask for any documents listed if these haven't been provided already. Normally, I like to request these kind of upfront just to save a bit of time with the process. Your broker will then ask for information about the new property, the estate agents, the solicitors, and also touch on things like valuation and surveys, what you'd like to kind of go with and what you'd like to proceed with. If we move on to the next slide. So in your discussions with the broker, so generally I like to speak with my customers, once or twice before they found a property, once for an initial kind of plan, second appointment just to kind of get the agreement of principal, mortgage and principal in place, and then the third one when you found the property. So in the discussions we have, that's when we'll kind of determine which mortgage will suit your circumstances, and then we'll recommend the mortgage product accordingly. So depending on the product chosen, this may be the stage where you start to pay fees towards the process, towards the mortgage application. So things like a valuation fee, depending on the type of valuation or survey you go for, any booking fees or arrangement fees. There's various different types of fees that the lenders can charge depending on the mortgage product. So once the mortgage application is underway, the lender will then instruct the valuation or survey. And if you want a more in-depth survey, this would be a good time to instruct your own through your own surveyor as well. The underwriting stage is next, and this can be quite a nervy part of the application. It's kind of a little bit out of your control. It's down to the lender to have a look through the documentation, look through the information, and make a decision based on that information. At this stage, they can also request kind of further information to support the application too. So once the underwriters are happy with the application and the valuation has been successful, the lender will then issue something called the mortgage offer. Now, this is the part that we're all kind of aiming for. This is a really exciting stage, as it means that the mortgage has been fully agreed. And then once the lenders, once you're ready, the lender will then release the funds to the solicitor ready for completion. We go to the next slide. So if we touch on protection as well, your broker will also recommend suitable protection policies to make sure you, your family and the property are all protected. So we'll kind of go into these in a little bit of detail just so you know what to expect when it comes around. So buildings and contents does exactly what it says on the tin, protects the property and the contents within it. It's a requirement of the lender to make sure that you have buildings insurance in place as a minimum, okay? Life insurance, this pays out a lump sum if you die, a little bit morbid, but it's what it does. It's often used to repay the mortgage for the surviving family. And it's also usually the cheapest cover, as the likelihood of actually dying during the mortgage term is quite small compared to the other policies. Critical illness cover will pay out a lump sum if you're diagnosed with a specified critical illness. I'm sure you can guess what the most common cause of claim is, which is currently cancer. Income protection, this will pay out a monthly percentage of your pay if you can't work due to accident or sickness. And quite a statistic that not many people know about is the average claim for this type of protection is around 7 years. So the average time that someone's off work due to accident or sickness is, yeah, 7 years. And then redundancy cover or unemployment cover pays out a monthly income if you lose your job. So the process with this is you'll complete a medical questionnaire or a property questionnaire, depending on the type of insurance that you're going for. That will then go through to the underwriting stages for a final decision. So things that can affect the amount that you pay for this or the decision are things like your age, your occupation, or any kind of existing medical issues that you may have. Okay, if we move on to the next slide. So surveys and conveyancing. These are both vital parts of the home buying process. Without a survey, you won't have a mortgage, and without conveyancing, you won't own the property at the end. So if we start with surveys, let's have a look at the different types available. Okay, so the main types are, well, there's 4 main ones. So valuation surveys, condition reports, home buyers reports, structural surveys, and then new build snagging surveys. If we start with valuation surveys, this checks the property value, and it's really more for the lender rather than the purchaser. And it's actually unlikely that you'll even see a copy of the valuation survey that the lender does. It lets the lender know that the property is worth enough to cover the amount you've applied to borrow. It kind of covers them in case they need to repossess the property in the future. So there's 3 main ways that a valuation survey can be carried out. And that's either via computer. So what they look at is kind of statistics, look at nearby properties that have sold, look at the type of property that you're buying. And if it's kind of like unlikely that there's going to be any issues with it, they will just have a look at their database and make sure that the value that you're buying is in line with the value of the property. The second thing they can do is a drive-by valuation. So literally, as the name suggests, the surveyor will literally drive by the property, have a look at it, make sure it's all okay. They might have a little walk around and then get in the car and drive off again. And then finally, a property visit. So if they think that you may be paying like maybe a tiny bit too much for it or anything like that, or they look at the property and look at the age and think, we actually need to have a look at this one, they'll arrange a property visit. So that's when the surveyor will actually go in, view the property and have a look around. If you'd like something a little bit more in depth, that's when we kind of come on to the others. So a condition report is a little bit more detailed. It's the cheapest one, and it's designed for kind of newer conventional properties that will give you kind of a basic report on the condition of the property. It will also kind of point out any kind of crucial faults with the property too. A home buyers report, that's kind of like a condition report, but a little bit more thorough. So the home buyer report will give you an expert's overall verdict on the property's condition and give a breakdown of the condition of all areas of the property. It will point out any kind of visible defects, provide guidance on any impacts on the value that this may have. So this kind of survey can be quite good for renegotiation of the price if it comes back and it's quite negative. If you're not kind of confident on the property's condition, this one is a good choice. And it's generally agreed that the home buyer report should be sufficient for conventional properties built in the last kind of 100 years. If that's not good enough, then you can have a structural survey. Now, this is a bit of a bad boy, this one. There are sometimes scenarios when a full structural survey, which is sometimes called a full building survey, might be appropriate. It's designed to give a much more in-depth examination of the structure of the property. And these surveys focus on kind of structural integrity and will mean that you have all the details you need to know about the property. For example, it's kind of like a converted barn or really old or, previously converted in other ways, or you plan on doing some quite extensive work to it, a structural survey might be the way to go. New build snagging survey is, so when you buy a new build, they normally come with like a warranty or architect certificate or something like that anyway. But I mean, I did a post on this today about new builds and about the kind of perks of buying them. And I got quite a lot of feedback about people that really don't like new builds and don't like the kind of finish of kind of more modern new builds these days compared to kind of more period properties. So a snagging survey seems to be quite essential, really. It's designed to kind of check for problems with a new build that may have been missed or may have been overlooked because of how quickly they kind of build them. it could be as simple as like a drawer that doesn't open smoothly, or poorly finished tiling, or something, sometimes even more structural problems that may have gone missed. So in summary, the valuation or survey that you go for will depend massively on the type of property that you're purchasing, and is certainly not something to skimp on. You're spending a huge amount of money on a home, so you need to make sure that it's okay. Right, so conveyancing. Conveyancing is the legal aspect of buying a property, and it transfers the ownership of the property into your name. It's generally completed by a solicitor, and as part of the conveyancing process, they will carry out all legal searches, provide any legal advice and recommendations, draw up and assess contracts, title transfers, act as your negotiator with the seller, estate agent or relevant lenders, deal with any money transfers on completion date, register the seller new ownership of the land registry, organise payment of any stamp duty, land tax. Now there's a huge amount of jargon with that you'll come across at this stage. So I'm going to cover like a few of the terms here, just so you have a bit of a understanding of what it means. So things like, what are legal searches for a start? These are inquiries made to various authorities to establish certain details about the property. So they include things like local authority search, water and drainage search, land registry search, and environmental search. And it's really just to protect you and the lender. They're an essential part of the purchasing process. It's not an optional extra, you do need to have it. They usually come at an additional cost to the conveyancer's own fees, but are usually clearly displayed up front, and they kind of range from about £200 to £400. So overall, costs for conveyancing will vary massively depending on the purchase price, depending on the tenure of the property. Is it leasehold? Is it a freehold? Is it a new build? Is it an older property? But on average, it will probably be between about £1,500 to £2,000 in total. If we continue with conveyancing. So exchange of contracts, what does that mean? So exchange of contracts is basically the point of no return. And it's when everyone is happy, copies are signed and exchanged by the solicitors, making the sale legally binding to both the seller and the buyer. So the buyer pays their deposit, which could then be lost, plus any kind of other legal costs if they pull out after this point. So bearing that in mind, this is also when any kind of relevant protection policy should be started, because you are legally bound to buy the property. And then completion. Completion is the date. We have moved across. Yeah, can we move across the next slide, please? Thank you. So yeah, completion is the date that we kind of all look forward to, and this is the date when you'll collect your keys. The buyer's conveyancer will transfer the balance of the purchase price to the seller's conveyancer, and the legal documents are passed over to the buyer. If using a mortgage, which you likely probably will be, the buyer's solicitor sends the mortgage lender something called a certificate of title, and then the release of the loan funds to the buyer's solicitor, who then transfers it across to the seller's solicitor. And this is all quite complex. So when you're actually doing it, you'll kind of understand the process. It doesn't happen as quickly as I'm talking, it's a bit of a staged thing with this. So on completion, the seller needs to vacate the property and the keys are passed to the buyer, ready for them to move in. So yeah, in summary, that is surveys and conveyancing covered. If you don't have any questions, which I can't see, then we'll move across to Peter, who will be talking about moving in, the exciting bit.
Joe, I've got a quick question for you.
Yeah, go for it.
What have you experienced as being maybe the most common things that solicitors throw up that that a buyer might suddenly have to think about? So I'm assuming it'll be something as a result of a search or as a result of the valuation itself. What type of things have you seen that buyers maybe got to think about?
It can be really random things sometimes. I mean, this week I've had one where the solicitor wasn't happy with kind of solar panels on the roof or something like that, because they weren't owned by the property. They were kind of leased. So the current owner didn't own the roof anymore and things like that. So yeah, solar panels can be a big thing. Discrepancies with the title, and if they've made kind of changes to the property that they weren't allowed. One of the big things is when they do things like extensions, or change the interior of the property, change the layout, and they don't have the necessary planning permission. these are all things that can be thrown up and cause a bit of an issue. So those are probably the more common.
And with those latter ones you just mentioned there about maybe not having planning permission or the building regulations aren't there, what are these sort of options? That is it something that's left very much with the seller, or is it that the buyer, or what type of things can a potential buyer maybe be thinking about if that was to happen?
So an example is one where they'd gone up into the loft and they'd made a bedroom up there. And it was no longer kind of covered by kind of fire regulations. So with this one, what they had to do was put up like a temporary kind of stud wall just to make it comply. That's kind of a bit of an extreme one. Normally they don't really have to do anything. What can sometimes happen is the buyer can take out like an indemnity policy to kind of cover anything like that. So like an insurance policy to protect them against, anything that the solicitor finds that they aren't particularly happy with. That's the more common route.
Right. Okay. Great. Thank you. We've had a question as well, Joe, which I'll let you take, which is, which aspects would be required as a cash buyer first time through auction? Now, I take it the question relates to that process from agreeing the price through to completion date. Is there what parts would change as a result of that process?
Well, things like surveys, you won't have to have a valuation done. The lender won't need to know what the valuation is because it's completely up to you. But as a cash buyer, you'll probably want to make sure you do your own checks anyway, especially if it's through an auction property. And it depends on what you're looking to do with it, whether you're looking to move into it, whether you're looking to rent it out. I mean, if you're looking to rent the property, then things like the energy performance of the property can determine whether or not you're actually allowed to let the property out. So yeah, I'd still recommend going through as much of the process as you would do with a mortgage, even if you are buying it as a cash buyer.
And I guess there, if you're a cash buyer, there's maybe more sense in maybe paying for one of the more complex valuations, because that if a lender finds something in there, should we say basic ones, they're going to demand that there is another more complex report done anyway. So if you're buying as a cash, it might make sense to go for a home buyer, not necessarily structural, but a home buyer's report.
I'd say so. Yeah, definitely. And what I find is, especially with cash buyers that are looking at auction, it's not just about that transaction. It's not just about that initial purchase. People that buy at auction then tend to renovate and then want to release funds at a later stage through remortgaging. So it's good to do that initial groundwork before you even get to that stage anyway. So the more you can do on the initial purchase, the better.
Okay. We've had another question. Any advice on buying flats with the new EWS1 forms regulations? This particular Sarah had to pull out of a property purchase because of the requirements, and asks, is there any way that she can avoid these complications?
Not really, not with the EWS1 form. So anyone that doesn't know, that's about the kind of high-rise properties that have the kind of cladding issues. And at the minute, no, unless the work's been done or the checks have been carried out to make sure that the cladding's okay, getting a mortgage is very, very difficult. And without the correct forms completed, it's near on impossible to buy with a mortgage.
So I guess, as harsh as it sounds, the only way to avoid it, by the sounds of it, is to avoid buying that type of property in the first place, if you can, of course.
Yeah, I mean, it's one of those things. If you see a property that's for sale like that, and the price seems a little bit too good to be true, chances are the changes haven't been made, the cladding isn't okay, and the forms haven't been done. So it's definitely worthwhile inquiring with the estate agent first, just to find out, and just to save you wasting money on things like surveys if it's a no-go right to begin with.
Okay, thanks. Right, Vivek, could you maybe just move the slide on? I'm going to start just talking about the moving in process for a little bit here, and it doesn't all happen at the last day, as you can imagine. And so what we've done is we've built sort of a should we say, a checklist of things that you should be thinking about at various different stages on the way towards completion and moving in itself. You have to accept that the points and the times that we've put here are indicators, and every property may be different in some way or another. So, but we've tried thinking of all sorts of different things that people may or may not need to consider. Some of them might seem obvious, some of them, and I'm going to pick up one that I'm going to talk about in a minute here, I've seen time and time again where people have got towards having to move house and they literally haven't got enough boxes to pack everything up into. Okay, so one of the early things that we think that people should be doing, and we've put here 8 to 12 weeks before, but it's broadly, it's at a point you won't have an exact date, or unlikely to have an exact date at this point, but you can be confident that you've got the loan, the price has been agreed, so you might want to start talking to your boss at work and maybe giving them some, telling them that you're moving, you're likely to want some time off, and you think it might be X period of time away. And what you're really trying to ask there is just get them into the expectation that you may be asking for some time off, and it might not have the normal notice that you might have given if you were booking a holiday months away. So booking a holiday. Similarly, if there are schools involved, you've got children, you might want to be talking to the schools, just giving them an early indication that you might be moving. I've said there packaging. Packaging, this can be as simple as your boxes, your bubble wrap, anything that's going to be helping when it comes to actually moving, and the actual packaging stage will happen further down the line. Clutter. This is pretty good time to start going through what you've already got to see what actually you really do want to take with you and declutter. And it's amazing how, and I can put my hand up to this time, I keep stuff sometimes just because I don't want to get rid of it. But then when it comes to a choice between, right, I've got to do something with it or not, then usually that's when I'll say, oh, actually, oh no, just get rid of it. And so it's a good opportunity to declutter at this point. Vivek, if you could move on to the next stage. Now, again, we've put here roughly 4 to 6 weeks before. Some of these things may already be in hand. So, for example, the house insurance and the protection like life insurance, and we would suggest wills as well, may be being dealt with by your mortgage broker. But what we're saying is you need to be thinking about these things. Similarly, are you looking at doing this on yourself? It might be that you are maybe planning on doing it all yourself, in which case now's maybe the time to start talking to those friends and buttering them up about whether they'll be available to maybe help you with it, whether it be packaging before or on the day. Similarly, at this point, you may want to be, if you've got pets, I can assure you, you probably will not want your pets around at the point on the day of or the day before of moving. So it might make sense to the earliest opportunity that you know some dates to be booking in a kennel or cattery. Okay, and similarly, the removal companies and van hires themselves, particularly a lot of first-time buyers will do this with a man in the van. They'll basically hire a van and maybe do it themselves, or with somebody to do the driving with them. This is the type of time period you need to be doing it early enough, because the last thing you want to do is to be leaving it to the very last minute when you know a specific date, and you can't get the van or the man hired, shall we say. Where if you can give them some indications, it means that it helps them as well. Okay, so maybe if you could move the next slide on. Now, when we're starting to talk 2 to 4 weeks away, and for some scenarios here, you may exchange and complete on the same day, but in some scenarios you may exchange on one day and the seller exercises their right to have a period of time, I believe it's 28 days, I'm sure Joe will correct me if I'm wrong, but it always has been a period of time with which they can say, right, okay, I don't mind exchanging my contracts, but I don't want to complete until a bit later. At least at this point, if this happens to you, you can start packing. And I mean, start packing phase 1, okay? Your packing will involve things like making sure that you are not putting too much into any one box. You know, you don't want anything that's too heavy. Or if you have got some boxes that are very heavy, then at least label them up so that whether it be you or whether it be a removal person, they can be prepared for it as well. Anything that's fragile, we would suggest you also put in there as well. But the reality is, even still two weeks away or 4 weeks away, you're not going to be able to pack absolutely everything, because there are things you are going to need, whether it be provisions or whether it be your own clothing, that you're going to need to keep something back. So this is sort of phase 1 that is packing the majority of the things that you've got, but not necessarily all of it. If you are planning on doing any moving yourself, then you may want to plan the route of where you're going from to the site, because most people haven't driven a van that's quite tall, and the last thing you want to do is to, if you're hiring a van yourself, is go down that route and suddenly realize the route you're going down is only wide enough for your one van. How confident that you are reversing, for example, or also you might have tunnels and bridges which you might be able to plan an alternative route for. So again, these are things that they're not, should we say, mortgage advice or home buying advice in the sense of the monetary aspects of it, but there's certainly things that will help you in the sense of the practicalities of moving it. Switching utilities. This is something else that you can either do just before you move, or you may want to do it once you've actually moved. It doesn't really matter. But the point that I'm getting at with utilities are that if you can save money, I think is the message. Yeah. When you start getting, sorry, I thought you'd moved on the slide. Thanks, Vivek. In the last week or so, we're now into the final straight, as it says. If you have exchanged, there's no backing out, right? But some very specific things you should be doing right at the end, and they are pack an overnight bag. Because the last thing you want to do when you actually have moved everything in, especially if you don't get the keys until, say, 4 or 5 o'clock in the afternoon, okay, the last thing you want to be doing is having to think about things like, where's my toothbrush? Where's my underwear, for example? Similarly, when it comes to that, you might want to investigate, are there any decent takeaways in the area that I've moved to? Because I wouldn't be surprised if most people, when they move, they don't tend to cook in the house on that first night out. They'll tend to get a takeaway, or they may have relatives or something that could help them at that point. Okay, but you want to be packing that overnight bag for that first night in. Give the place a bit of a clean up. I mean, there isn't anybody that says that you have to clean your house up, but I'm sure you'd like to think that you were going into a place that was relatively clean, so it's courteous to do the same. Also, about registering with the new local council to pay council tax as well. It's worth getting it done quickly, because they will catch up anyway. But with council taxes being potentially in the hundreds of pounds a month, then you don't want to be finding that you're 3-4 months before they're cottoned onto you and they start wanting large amounts of money from you. Also, general other address changes. There will be a number of things, whether it be your banking or other insurances, for example, that you'll want to write to tell them about your addresses. Now, get an address change. Now, you could do this all afterwards, but it's easier if you can be prepared for it, so that when it's all good and you know it's happening, you can get that stuff in the post and away in advance in preparation for it, or at least it's all written and drafted, ready for you to do it just after you've moved. Okay, so if you could move it on. The last night, basically this is your very last minute essentials into your bag. Make sure you know your key arrangements. I mean, it may well be that it's being done through, if it's being done through a new build, then it will be probably the sales office that you would go to there. Similarly, if it's through an estate agent, quite often, in fact, in most scenarios with an estate agent, you would collect the keys from the estate agent. But if you're not going through those routes, you want to make sure you've got those arrangements agreed with your agreed with the buyer, so you know what's happening. And obviously a final walk around. You would be surprised how you will walk around and you think you've got everything, and you'll open that last cupboard up and you'll see something in the bottom corner or whatever that you'd missed. Okay, so just make sure you have that final walk around. Okay. We then move to the day itself, if you could. Thank you. And this is a very busy slide, and I don't intend going through all of this detail, and the reason being that you're going to get the slides, access to these slides, so therefore you can pick it up yourself. But there are just a few things that are worthy of note, and some of those are switching off the water, gas and electricity, and in particular take the photo of any meters and record those readings that you've got. That's because you don't want to get into any dispute with the utility provider after the event. Okay, it has been known that people haven't taken these meter readings, and the person who maybe comes into the place you were at doesn't tell quite the same truth, and then you're into arguments with it. And secure all the windows before you leave. Okay. A little bit just around, if you're using removal companies, don't be surprised if once they're packed up, they just go. You know, they're not going to wait for the nod to say, yes, you can go. They will, once they're packed up and they've got everything, they will go. They'll get to where your new place is, and they will hang around until they get the nod from you that you can actually go in, and obviously they can unload for you. Okay. But when you get there, one of the first things to do is, again, take photos of the meters, again, you know, your water, electricity, etc., of the new place that you're in. Turn everything on. You then know exactly where you're starting and where you've left as well from that. Okay. But at that point, you actually first walk in that door. Do just stop, smile, and enjoy it, because you'd have had a few stressful moments during this period, and that walking in the door means you've done it and you've got there, and you should be proud of yourself for it. And you know, do stop, pat yourself on the back, and you know, get the kettle from the overnight bag. It's a tip there. Actually, make sure there's a kettle in that overnight bag, so that you can get yourself a drink when you get there as well, and also maybe for your removal men if you're using them as well. Okay. Very early on, you want to check the locks out of the place. That's quite clear that security is important. You may choose to replace locks. That's entirely up to you. But do just make sure that the place is secure. And as I said earlier, if you have now got everything in and you really don't fancy cooking or anything like that, then you can go and try and find one of those takeaways that you've already investigated. Okay. Minor little point here, but actually really, as somebody I've had a number of neighbours who have come and moved house either side of where I live. And it's really nice when you get them come out, when you get either you go to them and welcome them, okay, or they may come to you and just welcome themselves to you. It's nice to know that you're going to start your new home in a place that the people around you are nice as well. Vivek? Few bits here that are easy to forget. And these aren't things for on the day. You know, you can do these things just afterwards if necessary, but there are things like contacting the doctors and the dentists to make sure that you're registered there. If you've got a vets that you use, then you might want to register there. And a big one there is update the electoral register to make sure you're there, because obviously you want to be on the electoral roll for obviously voting if you want to, but also it helps when it comes to verification of identification purposes, because if you apply for something now, you have to appreciate that anybody looking at your identification is saying, oh, it's only been there a short time period, and sometimes they ask for a bit more to verify identification. So again, if you haven't already sorted out your utilities and getting the best deal on your broadband and phone bills, now's the time to make sure you're doing it. And I'm sure you would have already done this last one about texting around your new address, but if you haven't, make sure you tell all your relatives that you've moved and you've got a new address, so that they can send you welcome cards and, when it comes, Christmas presents, that type of thing. Okay, all right, Vivek. That's broadly, you've moved in, you've done all the immediate things, but the mortgage, particularly mortgages, have an afterlife. And I'm going to let Joe help with this section as well, because he'll be very aware of this. And when I first bought my first home, I wasn't in financial services, and it took a number of years before anybody told me that I could remortgage and get a cheaper deal than I was on. Okay, so and as I look back now, I'm astounded that I didn't know that. Okay, but it's true, I didn't. And it was because I didn't have a friendly mortgage broker. I'd done everything through the estate agent, the whole lot, the mortgage, the insurances, absolutely everything. And the estate agents have moved on. They've moved on to their next sale of property after that. Okay, but mortgages have an afterlife. So Vivek, if you could maybe move the next slide on. Okay, so a few things you need to get used to once you are moving it, once you've moved in. It's redoing your budget planner. Okay, your expenses have changed, so you need to redo that so you get used to that new exercise. Now, in some of the previous seminars, I had explained how you should try and estimate what you think your budget might be when you're in your new place. Well, now's the time to verify how accurate you were, because you may well find that you've got some excess money that you can put towards something. It might be your retirement or general savings and investments, because one of the bits you have to acknowledge moving forward is that your mortgage is effectively, you can argue, is saving towards an investment, which is your property. Okay, but your property becomes something that is illiquid. It's something that you're going to live in, you'll enjoy, and you'll enjoy it, of course, but you should then be starting to think of other things around more liquid savings, investments, and your retirement planning. Okay. We also recommend people periodically review things like wills and lasting powers of attorney, particularly things like wills. I mean, the wills, when you first normally take them out, you maybe haven't got children, you may be not in a relationship, but that soon changes, and a will isn't automatically void. It is not automatically void when you maybe join into a relationship and your wishes are different. Okay, could you move on? I'm almost tempted to pass over to Joe, but Joe wouldn't have expected me to this. But I will just say, at the end of your deal, whatever deal you've gone for, whether it be a 2-year fixed rate or 3-year, 5-year, whatever, when you come to the end of that deal, you will go onto the lender's standard variable rate. They may write to you and say, oh, we can offer you this really good deal, which means you don't go on to that rate. and you will think, oh, that's good, they're being good, and you might automatically move across onto that so-called deal that they're giving you. My experience here says, talk to a mortgage broker. They're not just there for when you buy the house, they're actually also there for getting you a better deal as you go through your mortgage life. Okay, anything you want to add there, Joe?
Yeah, definitely. So when you take out your initial mortgage, obviously it's based on your kind of circumstances at the time. So for example, you might go for like a 2-year fixed because you may want to grow your family in 2 years' time and then move and upsize. And so, yeah, dealing with kind of a broker throughout that journey is actually quite nice. And I've got, customers that I've dealt with for years, and I've seen, them move from one property to another, and we change from one lender to another, and their circumstances change all the time. And your existing bank or lender's not going to really know the details particularly well. So, and it goes back to the same thing as when you initially took the mortgage out. All they'll do is kind of show you a few products and say which one you want to go for. Whereas kind of what a broker does, what I do is kind of, assess everything, assess your life, assess your occupation, assess your future plans, and then recommend the deal for you. Yeah, it might be a 5-year fixed, it might be a tracker mortgage. So yeah, I really like doing remortgaging because you get to see how things have changed over the years. So yeah, I love it. I really like doing them.
Yeah. Okay. So, and this is the type of thing, the don't always look for the cheapest. That's a good example of where Joe, as a mortgage broker, would be asking a number of things that might say, well, actually, if you want more potential to pay off, for example, capital off the loan over the next thing, then it might be a different type of mortgage, maybe slightly higher rate, usually marginal, I would have thought, but offers more access to pay something off the loan. Then that's the type of thing that your mortgage broker would be looking for. Okay. And, if there is this other bit around porting of an existing mortgage. Now, again, I have to bow to Joe's knowledge in here because he is the actual mortgage broker where I'm financial advisor, is that if you're looking at moving a house in the near future, some mortgages allow you to port a mortgage over where maybe some don't. Is that correct? Or
yeah, so let's kind of run through a bit of an example. Say you went for like a 5-year fixed mortgage. During those 5 years, there's going to be an early repayment charge if you clear that mortgage off in full. So if you want to move after year 3 and you move, you change to a new lender, you pay off that existing mortgage and take a new one out, there might be, thousands of pounds worth of charges to consider. So what you could do is port your existing mortgage. So basically pick that mortgage up, take it to a new property, and then get like additional borrowing on top with the same lender. And if you do that, that then avoids paying any early repayment charges because you haven't actually repaid the mortgage, you've just taken it with you. Downsides of that are obviously you're limited to that lender. So if your circumstances, they may have fit with them initially, but their criteria may have changed, so they may not be the most suitable or even lend you the money at that point in time. But it's definitely a good facility that lenders do offer, and I'd say 99% of mortgages these days allow you to port your mortgage.
Right, okay. Although it comes back to the point about that's the type of thing you may be asking somebody about whether they have got plans or in the short term to be looking at moving, because that might change, the type of advice you would be giving them.
100%. I always ask what their plans are. There's no point in recommending a 5-year fixed if they're looking to move in 2 years for that exact reason. So yeah. Okay. 100%.
Excellent. Okay. Vivek, could you move the slide up? Yeah. Unfortunately, sometimes things can go wrong. And we've seen some examples of this more recently with the furlough, of course, but people get made redundant, people fall ill, and sometimes if you've bought as a couple, relationships can break down. Now, some of this you could have insured against. at the outset, which Joe was talking about, for example, through redundancy cover and illness cover. Some things you can't, and some things, you know, it's just life. But what are the things you can do if things do go wrong? Well, the first thing you should really be doing is go back to your budget, and you've got to reprioritize your outgoings. You know, the simple fact is that the first thing that most people will make sure that they can try and afford, aside from food in their mouth, of course, is a roof over their head. So by reviewing your budget and prioritizing, and unfortunately maybe having to go for an older phone, or maybe not the top Netflix subscription, for example, you've got to make decisions about that. If it is possible, again, I would suggest sometimes it might be possible to look at some form of debt consolidation, if necessary, by putting different debts together. You might get a cheaper ongoing repayment for it. Sorry, by merging your different debts into one, then you may find that will be cheaper for you and help the affordability. Don't be afraid to seek help from family and friends. I know it's not something that people would automatically feel easy with, but you know, your family and friends, no doubt, and particularly your family, of course, would no doubt want to try and help you if they possibly could. So do talk to them. But if it is really getting to the bit where you think there's a strong likelihood that you may not be able to maintain the mortgage payments, best thing you can do is speak to the lender early. They don't like surprises. That's very evident in the actual mortgage application process as you go through that, the things that they're looking for. So do speak to the lenders early, and if necessary, turn to the arrears department if you've got other loans and debts, because it's in their interest for you to be able to have something that is affordable and maintainable long term. It's not in their interest for you to basically fall valid, not being able to pay back your debts. Okay, these arrears departments do want to help you where they can. You obviously have to appreciate that they are in business as well, though. Okay, but this is the bits I come back to again, is that so often, sometimes I talk to people about, maybe, have you got illness cover, and they were offered it. It's not that it wasn't spoken to them about, but it was something that people have thought, well, no, I'll take the chance. Well, just accept that things do sometimes go wrong. Okay. So, Vivek, we're broadly there. Okay. Yeah. I didn't know if you wanted to just finish us off and lead us into any Q&A if there are any.
Yeah. So, Joe took us through kind of, once your offer's been accepted, the kind of mortgage application and kind of the different types of surveys and conveyancing and what that all kind of means and entails. Peter took us through the things to consider when moving in and really getting organized around that. And we've just kind of run through the mortgage afterlife, and that really is kind of the kind of takes us through to the end state where I guess, you know, people would have moved in, they're kind of happily settled in their homes, and they kind of know kind of what they need to be doing from that point onwards. Kind of want to remind everyone that you can kind of rewatch our sessions on kind of our YouTube channel. Dan has posted the link there. We're going to have all 5 sessions that we run through up on that kind of quite shortly. The kind of previous 4 ones already up there. And yeah, I think now's a good time to kind of move on to any Q&A. I can kick off with one that was kind of in my mind as Peter and Joe, you're both kind of talking through this as part of the mortgage afterlife. But one of the things that I find quite puzzling is how a lender can be kind of the best provider of a mortgage, let's say 1 year, but 2 to 5 years later. when it comes to kind of remortgaging, why things could change to make them not the kind of best provider of a mortgage at that point. I don't know whether you've got any thoughts around that in terms of what can change and why people should be looking beyond their existing lender when it comes to remortgaging.
Yeah, I've got something. There's one lender in particular that does this, and I think it's a little bit naughty. But if you take out a mortgage with them, and it's a really good rate, really competitive rate, and then you come to remortgage with them in the future, the rates that they offer their existing customers aren't as good as they offer their kind of new customers. And so 9 times out of 10, it kind of makes sense just to swap to a different lender, just because they kind of price themselves out of the market just by doing that. But they rely so heavily on people just not really bothering and just doing it themselves and just choosing a product because it's easy and, you know, it works for them. And sometimes that's a reason for me not to pick them in the first place, just because of their aftercare.
Yeah, I guess it plays to kind of, you know, the convenience of the whole process, doesn't it?
Definitely. Yeah, I just don't think it's treating customers fairly, particularly, you know.
Yeah.
Yeah. Another factor, which is it's a bit more macro level, this, but broadly, if you see a bank that it has savers, so it has people putting in the money in the bank as savers, that all the time it's sat there not actually doing anything, it's costing them. So therefore they want to lend out. They want to lend that money out. If they have got very, let's say the savings volumes, deposit volumes are lower, then for them to lend out, they've got to get the money in from somewhere, and that's incurring them costs. So what you find is that at the macro level, that sometimes it's the balance of the books rather than necessarily them always wanting to be the most competitive. And you see this in life assurance as well, that sometimes, I mean, there was a long period for life assurance where Legal and General were the absolute cheapest for life insurance for quite a long period of time. And that was because they were trying to get business on the books. And then once they'd started to get high volumes of business on the books and started to experience the claims, that's when they started to want to dampen down some of the new, so their rates weren't quite so competitive. So it can happen in a very similar way in the mortgage market as well. You can also find that it can come down to the way the budgets have been set for the companies, in the sense of if it's right at the beginning of the year and the budgets demand a lot of money coming in, then you'll normally find that they will put on good offers at that period in time. If later on in the year they've met a lot of their books, and I come back to this balancing act between whether they've got to borrow to lend to you. That's the last thing they really want to do, is unless they can do it cheaply. But so it's this balancing act between the two. So it's not always about why wouldn't a lender want to offer the best all the time? Well, sometimes there are these reasons, such as balancing the books at the end of the day, that might drive that as well. Okay.
Gotcha. Cool. I think we've got a question from Sarah. So what costs are associated with remortgaging? Joe, do you want to take that one?
Yeah, sure. So a lot of them are quite similar to the initial purchase. If you're remortgaging, then you're changing to a different lender. Now that lender is going to ask pretty much exactly the same questions as the original lender did when you bought the property. So they're going to want to check the valuation. So there might be survey costs. But 9 times out of 10, to make it easy, they tend to offer quite a lot of perks with remortgages. So they'll offer things like a free valuation, and then you wouldn't need to really upgrade it to things like a home buyer's report, because you already own the property, you already know what the property's like. So, you know, they'll cover the cost of a valuation. There's conveyancing involved with it as well, but they'll offer things like cashback to cover the costs of that, or offer their own in-house kind of conveyancing to deal with it. So You can really remortgage sometimes if it's a competitive deal with little to no expense at all.
Just another bit, and Joe, I'm not sure where your stance is on this, but I said before that I'd gone a number of years where I wasn't remortgaged, where I hadn't sort of remortgaged until I sort of came a bit more into the industry and a bit more aware. But something else that happened, and again, this was me in the industry, and I'd remortgaged over onto a 5-year deal. And I might have to display my age a little bit here, but this was when interest rates were quite a lot higher than they were now. Mm-hmm. And I'd gone on to this 5-year fixed rate deal, and rates dropped quite considerably. And I just sat there thinking, oh, well, I won't be able to, I'll remortgage in a few years' time when I come off it. But actually, my friend, the mortgage broker, who sat me down, and he turned around and said, yeah, okay, you're going to pay a penalty to be leaving this, but look at the amount you're going to save over the 3-year deal that he was talking to me about. He said, the savings over the 3 years more than covers the penalty you're going to be paying to move over. So my lesson from that was, don't always assume that you should only ever consider remortgaging when you're at the end of the mortgage term, because circumstances might change that it's worth at least investigating doing it earlier. It might not always be the case, because, and I'm sure the mortgage advice regulations will be very strong in this area, because the regulator wouldn't want brokers, what we call in the industry churning, which is basically moving people's mortgages just for the sake of it. They would want to know that there was something to be saved. But is that something that is still looked at today?
Kind of, yeah. I mean,
I guess interest rates are...
The thing you've got to think about is how low interest rates are. So the actual amount that they're likely to be saving usually won't outweigh the early repayment charge. If it's something like, initially they bought a property with a 5% deposit and they're on a rate of kind of, 4% or something like that, and they've done some work to the property and the value's increased, and they can now get a rate of like 1.29% because of the equity that's built up in the property, then definitely it's something that you can potentially look at. But yeah, as you rightfully said, it depends on whether or not there's any actual savings there for the customer or not.
Yeah,
definitely.
Yeah. Okay. Well,
I guess there is a bit of a backdrop there around. I mean, you guys have had a lot of experience in the mortgage industry over time, but rates are extremely low at this point in time in this cycle, aren't they? I don't think they've ever been this low. I don't think they've been this low for a very long time, right? So it is worth at least pointing that out and taking note of that.
Thanks for making me feel old, Vivek.
Right, I don't think we've got any questions remaining. So I think on that basis, it's a good point to wrap up. I want to thank everyone for joining, and to kind of remind everyone that you can kind of follow us on social media, and there's kind of the handles for Joe there as well. In terms of the Homebuyer Coach, heavily recommend his especially his TikTok videos. They're very entertaining. And I want to thank everyone who's joined us today and for all the previous sessions as well. If you need to get reminded